Hello, this is Mark from Right Line Trading, and I just wanted to create a very short video to illustrate a point. I've already posted one today, and I don't want to overrun our YouTube channel with lots and lots of videos, but I wanted to illustrate a point about a trade we saw this morning in the trade room and show why the historical look back or tracking of performance of any piece of software can lead to really significant erroneous results. And when I saw this trade evolve, as we all saw it evolve in the training room, I think it really served to illustrate a good point. That if you go back and look at all the signals that your software generates as an historical review, it may not even come close to estimating its actual performance in a live trading scenario. And I think, if anything, this trade illustrates it better than any. This took place on gold this morning at 9:38.11. Now, a very aggressive entry would have been an entry here off of a momentum signal on, we're below the 50, below the 15, the right line, trend line is red. This is not necessarily a trade that I would take. I don't like the setup, and this is not the kind of momentum signal that I really like to chase. In addition, stochastic is against me, even though I have order flow and momentum with me. But that's really not why I'm making this short video. I just want to show the time of this trade. This trade takes place at 9:38. The market comes down, and it doesn't make any difference whether we're in the trade or not, whether you went for this aggressive entry or you didn't. I would not have and didn't. But now the market comes up here at 9:41. You get a gorgeous, at 9:40. You get a gorgeous power entry at 9:40. The next candle is at 9:40. This candle is at 9:41. This candle's at 9:41. This candle is at 9:41. 9:41. 9:41. 9:41. I sound like a broken record, but 9:41, 9:41, 9:41, 9:41, 9:41. So the trade from here, and we don't know how many seconds, to here evolved over a period of 1 minute or less than 60 seconds. This is a 9:41 move. There's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 range bars in this move. And it happened so fast that there's no way that we could have gotten into this trade because we didn't have a chance to see it evolve. Now, it fired off all the signals. You get a terrific pullback power entry here, another terrific pullback power entry here, and it looks like if we did an historical chart review, we would have a nice move to the downside, pullback, nice move to the downside, down. But in reality, we couldn't get any of this move. I mean, I think it evolved in maybe 15 seconds. We know that the whole thing took place in less than a minute. So this is the problem with doing historical chart reviews, where people go over their signals, look at their entries, and look at system performance without looking at another parameter, and that parameter is time. Now, gold makes lightning moves, and so does crude oil, and sometimes so does the Russell. So these are issues that are never taken into account when one does an historical review of signals that are created by a software system. And I just wanted to show this move to illustrate that point. You really need to trade these signals live to see if they're actually obtainable If the setup is such that you can actually get your mouse over to your Superdome and get your order entered before the entry has long since passed. And this entire move was untradeable. Thanks for your time, and I hope you have a very, very, very nice evening.